Welcome back again to another video. In this video today, I will be showing you how to trade the fair value gap concept on 4-hour chart to identify potential trading opportunities in the market. And also, if you are looking for a trading strategy that is suitable for prop firm trading, I would advise you give this strategy a try and you will be amazed that you did. Let's head straight to the chart and see how this strategy works. Welcome back again. Let's take a quick recap on what a fair value gap is all about. Now, what is a fair value gap? A fair value gap is a gap created between three candles, and this gap causes an imbalance in the market. Okay, and the market must come back to mitigate or fill up this imbalance before moving away to its direction. Okay, now how do I identify this gap? Now, once you have spotted these three candle 1, 2, and 3, and there is a gap between candle 1 and candle 3. Now, the only thing you have to do is to mark out that gap. Once you have marked the peak of candle 1 and the bottom of candle 2, you mark it out. That gap that is between them is called a fair value gap. Now, this is on a bullish scenario. The same thing goes on a bearish scenario. Now, you start from candle 1, the bottom of candle 1. Okay, you mark out again the peak of candle 3. Remember, it forms between candle 1 and candle 3. Okay, now once you have marked it out, now this gap that exists between the candle, the gap here is called the fair value gap. One thing I want you to know is that the color of the candle combination does not matter. Okay, what matters is the imbalance that is created by their movement. Now, as long as there is gap between candle 1 and candle 3, now that particular gap must be mitigated by the market. So that is what matters more in the market. Now, let's go back to the chart and see how we can make use of this fair value gap in making our entry decision. Once you open your chart, the first thing you have to do as a trader is to identify the market bias. Okay, the market bias simply means the direction of the market. Looking at this now, you discover that the market is what is in an uptrend. So this is a bullish bias. Now, after identifying the market bias, the next thing you have to look out for is to identify the market cycle. Okay, now the market cycle comprises of the impulsive wave and the correctional wave. Okay, now impulsive wave goes in the direction of the market, while the correctional wave goes in the opposite direction. Okay, now another impulsive wave and correctional wave and impulsive wave. Now this is how the market cycle moves. Once you have identified your market bias, the next thing to do using this strategy is to mark out your market cycle. Okay, now that is what we are going to do here now. This is my correctional wave, impulsive, correctional wave, impulsive, correctional, etc. Why are we marking out this market wave? Now, the reason why we are marking out this market wave is to help us identify or give us a clear picture of where to look out for the fair value gap depending on the position that we want to open. Okay, now if I want to open a short position, I should be looking out for a fair value gap that falls within the correctional wave. Now, but if I want to open a long position, I should be looking out for a fair value gap that falls within the impulsive wave. Okay, now once you have been able to identify the market bias and you have been able to mark out the market waves, now the next thing we are going to look out for is for the fair value gap. Now, depending on the position that we want to open. Now, looking at the chart we have here, you will notice that this is a bullish trend, and on this bullish trend I am only looking for a buy position. Okay, I'm only looking for a buy position now, because when trading you don't go against the market trend. Now, what next do I do? Now, you spot out the recent fair value gap that occurred on the impulsive wave. Once you have spotted out this fair value gap, the next thing you do is to step down to either 15 minutes or 5 minutes to look for your entry. Okay, once you have spotted your entry, you can enter your trade and enjoy your profit. Now let's start with this. This is the recent fair value gap that I can spot here. This is candle number 1 and candle number 2 and candle number 3. So this is the recent fair value gap that I've spotted here. Now we're going to mark it out so that it will be easier for us to identify by the time we step down to 15 minutes or 5 minutes chart, depending on your own preference. Now for me, I like using the 5 minutes chart. You go down to the 5 minutes chart and look out for the marked area. Okay, this is my marked area. Okay, look at it here. You notice what? The market came down all the way here and tapped into the fair value gap before moving away. Okay, you see, so within this area of the fair value gap is where you start looking for your entry. Now there are many ways to enter this trade. For me, what I normally do, I pick my Gann tool, I mark it out. Now 2 ways for me to enter using my Gann tool. I either enter on the 0% level or the 0.50 level. These are 2 levels that I normally use in entry of my trade. Now if I entered with 0% level of the Gann tool, you notice that the market came in, triggered my trade and gave me profit. Now let's look out for another example. Now we'll go back again to 4 hours. Let's zoom in. Let's see if we can spot another fair value gap on this impulsive wave. So we are done with this. We took the profit of this particular one. Let's see if we can spot another fair value gap. This is it here. Another one fair value gap. Yes, I've spotted this. Then I mark out the area so that I'm going to look for it on the 15 minutes time frame. Okay, you mark it out. Okay, let's go down to 5 minutes time frame. Now this is the area that I marked on the 5 minutes time frame. So as usual, I pick my Gann tool. Now within this area of the fair value gap, I plot my Gann tool. Okay, now I enter either with the 0% of the Gann tool or the 50% of the Gann tool. Now as usual, you notice this market was triggered at this point before moving away. Now let's look out for 1 or 2 examples of a bearish scenario. Now on our chart here we have Euro USD. So if you look at the current bias of this market, you will notice that this market is in a bearish bias. So the step number 2, after we have identified the market bias, says we should mark out the market waves, which comprises of the impulsive move, the correctional move, impulsive, correctional, impulsive, and another correctional is setting in. Okay, now looking at this now, you notice that the bias of the market or the market direction is bearish. So the only thing we'll be looking out for here is a sell position. Okay, I don't have anything to do with the buy position because I don't want to go against the market trend. Now what do? I identify the fair value gaps that occurred on the impulsive wave. We're going to start from the recent fair value gap till we locate all the fair value gaps that we can find on this impulsive move. Let's see how the market reacts to all the fair value gaps that are within this impulsive move. Okay, now let's start from the recent one. Now on this recent one, I can spot a fair value gap here. This is on the 4 hours. You mark it out on the 4 hours. You mark it out so that it will be easy to spot when you go down to your 5 minutes time frame. Let's look for it. Yes, is the area of the fair value gap that we marked out here. Now let's look at how the market reacted to it. You see, the market came down here just to balance the inefficiency before moving away. Now how do I enter this trade? I pick my Gann tool. I plot exactly the area of the fair value gap. On a bearish movement, I pick 1% or 50%. But on a bullish movement, I pick 0% or 50%. Okay, So on this case now, I will pick 1% or 50%. So if you look at this now, you notice that the market came in and tapped the trade in, and you see, and give profit. Okay, I believe you've learned something from this video. Just like I will always say, go back to your chart, backtest this strategy before implementing it in your main trading. Before you go, don't forget to hit the subscription button, turn on the notification bell for more videos to come. See you in my next video. Bye.